Hey traders, Raghee here. Welcome to our Thursday episode of Charts and Coffee. Great to see you all. All right, so let's get into it. We've had a couple interesting days in the market. I think yesterday's CPI definitely jolted the market into some realities that it did not want to accept, and we definitely have the aftermath of that. It playing out in bonds. Playing out in commodities. Thanks, Bubba. Then we have coffee for Charts and Coffee. All right. I was scrambling to make some coffee before. Charts and Coffee. All right. So we have the reaction playing out in the reflation trade. We have the reaction playing out in clearly in equities. We see it in bonds. We see then the reverberations into gold as the real yields are in play. So a lot that we have digesting, really, because not of a singular event of yesterday's 8:30 a.m. CPI, but rather because the market sort of known this. Janet Yellen said it out loud, which was true. She had to walk it back, even though what she said was absolutely true. And then because the market's been sort of knowing this, and now they have the evidence, and it sort of diminishes the credibility of the statements that the Federal Reserve has been making about inflation. Yeah, we're seeing the tantrum play out. And the tantrum, again, plays out into 2022. And what we're wondering is, are we starting to see that timeline to the eventual taper and to an eventual 25 basis point hike, truncated? And let's face it, stonks hate that. And that's where we sit right now, gang. Do I like a number of markets? We'll talk about it. There's still some places where we have uptrends, but a lot of those have been definitely a lot of the longs have been shaken loose. I'm still bullish in a number of places, just not related to tech, unless I'm going to be a little bit more aggressive looking at the strength in communications, XLC, because of Facebook and Google. By the way, the reflation trades that we have been talking about in this show, in the futures room, in the sector secrets mastery, in the options room for months, that's still alive and well. That's still alive and well. So let's not confuse the trend of the broader markets with the reflation macroeconomic trend. All right. Okay. So let's get to it. As far as what's the first question? Good morning, Peter. Can I remind us where to anchor the VWAP on the end of day chart? Well, there's a number of places you can anchor a VWAP, Peter. You can anchor a VWAP to the first of the year. You can anchor a VWAP to the first of the month. You can anchor VWAPs to earnings or certain volume patterns and price patterns that I'll look at to anchor VWAPs. That's more subjective, but if you want a more broad stroke, objective way to anchor the VWAP, you can do so with some of those dates. I will almost always have a VWAP on my chart just simply anchored to the first of the year. So thanks for the question. Could we please take a look at Google? Of course. So let me show you something, because it's reminiscent of what happened in soybeans. I love this pattern, and it's one that's difficult to trade because of the time it takes to move higher, but it's a perfect combination of what I love to do, which is buy the dip, coupled with, really the flagship indicator. Here it's simpler, which is the squeeze. And Google had a great pullback into the wave within the context of a bullish market. And then it started to consolidate. We can see the Darvis, we can see the blue grab candles, and notice how the market got very blue, right? We have that song, When the Stars Go Blue, which is a great song, by the way. Well, we know when the candles go blue, it's just as magical. And so that when those candles go blue, that's a market that is continuing to compress. And that's really the setup. So then I got to ask myself, am I seeing anything remotely like a pullback into the wave, remotely like that kind of compression? I'm not. So I other than the 55 exponential moving average, I don't see a lot that I love in Google. And while we're talking about Google, we've got to talk about Facebook, which actually I like a little bit better, but probably the easiest way to do this. And this is the way that I'm doing it. So all my cards on the table. And this trade is underwater right now. So again, all my cards on the table. My favorite way to get exposure to the Facebook and Google narrative is to look at the XLC, because A, it costs less. That means my cost basis is less, scaling in is less expensive, and being wrong is less expensive. And as I like to remind everybody, I don't mind paper cuts. They sting. They let you know they're there. But I don't mind paper cuts. I just don't want to lose a finger. There's a difference in the way that you manage risk. Lots of people, I'm amazed they have any digits left to type on the keyboard. Take paper cuts. Now, again, there is that very slippery slope of, I can't get out now, I'm losing too much. So keep that in mind. And I think an easy way to handle XLC, which is going to be under a lot of the weight of what's happening in the NASDAQ, the QQQs, the NQ futures, is to play the relative outperforming sector or stocks within that. But I'd be really cautious, and I'm going to continue to play XLC. All right. And XLC has been good to us once already. And you know what? I need to mention this really quick, gang. Buying the dip is going to get maligned by people who don't understand what buying the dip is. Buying the dip, the prerequisite is a trend. There is always going to be that one last trend trade. And the fear and the schadenfreude of mocking dip buyers when eventually the trend breaks, we go into chop or even a downtrend, is hilarious to me. Because if someone's been buying dips and trends, they've probably gotten in 3, 4, 5, 6 times just in 2021 from about $67 on up to 70. The last dip buy was 76, which is one we took. We've been buying dips, and taking advantage of the trend where dip buying is valid. We're going to have one that stops us out. I don't mind, like a great baseball player, going 3 for 4 at bat. Worrying about striking out once is never going to allow me to get on base. We just want to get on base. And so if finally in this structure that the market is not going to catch an oversold low, that the market is not going to be embraced and supported by the wave, so be it. We'll go find trends elsewhere. So there are trends to be found. Don't let what is ultimately going to be the mocking of dip buying begin, usually by perma bears who've been getting their arses handed to them for the past, I don't know, 10 years. So, remember the game that's being played. There's one that's being played with a lot of the financial media and a lot of chatter and social media. And there's one that's played where we live, which is at ground level in the trenches with our own capital and analysis. So yeah, I always find these kind of pullbacks hilarious because, the bears start throwing parties and the momentum players start freaking out. And the dip buyers say, well, there's always going to be that one last trend trade. All right. Anyway, bullish bearish sectors to focus on. Glenn, right now I'm still going to be looking for double green. I don't feel that XLI, IYT are a lost cause. I like the trends in most commodities, coppers and crudes. I like then the trend in many of those commodity related stocks, right? We can go more broad with an XLE conversation. A few folks asked about miners. Gang, I still don't love gold. Gold is broken out of a 1, 2, 3 pattern, but not much better than that. So I'm not going to play miners yet. But metals and mining, here's an ETF that some of you may not have ever looked at. This is one that I definitely would recommend continuing to focus on, is the XME. So there are definitely some sectors and bearish. Glenn, not so much. I'm not really bearish quite yet. I know that might sound crazy. I can get bearish on, and we're going to talk more about this in the futures room and in the options room and in the sector secrets, but I anchor VWAPs. And I think I've talked about this in a few free videos. I anchor VWAPs in such a way that once we go yellow on our JT multi-trend, which is just a color-coded indicator that measures on the top row. Take a look at the bottom of my chart here. The top row is the 81321 structure. The bottom row is the 34. I separate the 34 because it is far better at recognizing trending structure than, say, the 21 to the 13. Forget the 8, right? That's way too twitchy. So in the case of when the 34 goes yellow, I don't want to get bearish. I might have some chop. So the idea then is, what can I still do with some of these markets that are going into a sideways market after the preceding trend was just broken, was bullish. It's akin to taking your foot off the gas pedal when you're going down the highway. You don't stop, and you certainly don't reverse. You just coast. And sometimes the markets are going to coast, and oftentimes it looks like distribution. So next up is, bear with me here, gang. Any blue light specials in this market? Dennis, yeah, lots. And in some of the places that we've been talking about so far. Let's see what else we have here. Thoughts on Boeing? Other than the 200 EMA, I've got no interest in a stock that is heavily weighted in some of the sectors that have been doing well, but can't get out of its own way. So other than the 200 EMA, I've got no interest, no skin in the game in Boeing, my friend. Home Depot is very interesting to me. The problem with Home Depot is not the sectors that it's heavily weighted within and not the structure that it currently has, but the proximity to earnings. I can't imagine earnings would be disappointing. However, it doesn't matter if earnings disappoint expectations in terms of consensus. I'm looking at those whisper numbers. What's being factored into Home Depot? And that's where I would have to go back to Estimize, pull up Home Depot, and start to look a little bit more at what is expected in terms of that whisper number. And I do that at Estimize. I think Estimize is a great place to do that research. But generally speaking, because we're so close, we're within a week, calendar week, to earnings, I'll usually wait for the aftermath of earnings. The risk of that is if it takes off without me, it takes off without me. If it pulls back further, great. I've got a fantastic opportunity to scoop up a name like Home Depot. But Home Depot is going to be selling off with that home builders narrative. And gang, I got to tell you, as much as I've loved home builders and construction, those are two ETF, two industries that I've been bullish since the end of February on. In fact, when we were reconstructing our book of trades in the Sector Secrets Mastery to focus on not tech, how's that? And the first two trades that we put on, I believe, were KB Homes and Lennar, maybe DHI. I can't remember exactly, but we started moving into that part of the market. So that's definitely been something we've liked since the end of February. And I've done so a little bit more with, say, LEN, DHI, KBH, names like that. One of the problems right now with that particular corner of the market is that CPI, you guys saw this, it shook up the 30-year bond. It shook up the long bond. And by shaking up the long bond, it shakes up the longer end of the yield curve, which of course is very much tethered to mortgage rates. And that's why you see what have been very, very strong parts of the market get absolutely clobbered by what happened in the CPI reaction in the aftermath of that. So just heads up. Do I do futures analysis or just stocks? I do a little bit of everything, John, as we do every morning in the show. As far as Lennar goes, same narrative-ish as we just talked about. Just be a little patient as that CPI it's going to start to, the dust is settling still. And again, it's not the CPI alone that has caused this. It's the fact that the CPI has basically reminded us of how little we believe what the Federal Reserve has been saying about transitory inflation. CPI yesterday called BS, and that's what happened. Now, let's return to some macroeconomic trends. XLB, love it. It's one of the, you guys were asking, where are there blue light specials? Where are there trends in the market? Look no further than basic materials. This is still going to benefit in a macroeconomic way. But one thing that was interesting about yesterday's sell-off was the fact that staples and utilities got hit hard. And I think that is something that the market is going to reconsider, because if you're going to start to doubt what the Fed's trajectory to ultimately taper and then rate hikes are going to be, if you're going to start to watch if asset purchases level off, if you're going to start to watch if the M1 money supply starts to level off, key macro factors, you're going to want to wonder how quickly the market's going to want to shift into defensives, right? And or go more, all in on the ags and other macroeconomic, your energies, ags. That's what I'm kind of thinking is going to happen. Healthcare has been pretty resilient. Financials have been quite resilient too. So there's still quite a few places, including XLB, Deborah, that I like very, very much. Do I do Forex? Vaughn, I don't do it as much, but Forex is currencies, and you can do currencies via ETFs. I personally still trade Forex actively, personally. We just don't have really, quite frankly, we just don't have a broad audience for it. In the US, we don't really have a broad audience for Forex in terms of our simpler community. That's okay. It's really a more minor market in the US. Now, when I travel abroad, it's all anybody asks me about. Nobody asks me about Apple and Tesla when I travel to Europe, or when I've traveled to Korea, or even when nobody asks. They ask about the euro. They ask about bonds. They ask about the dollar, things like that. So it's very different once you get abroad as far as the view of currencies. But in the US, it's just not as big an appeal. But I love currencies. We can trade them three ways: ETFs, the countries, which I think is a great way to trade. We're long Canadian dollar, and we're long Canada. So I love that. But I do have a class. I do have a Forex class that I did early last year, which is really my most current approach to using volatility analysis and trends to trade Forex. And that's really what I continue to do. Okay, next up is what is the narrative on UNG, on natural gas? So I would start with NG on that one, and then I would go UNG. It's a double green, so pullback buys are valid, but I would highly recommend, if you're going to play natty gas, go the options on the UNG route. Natty can be a wild one. They don't call it the Widowmaker for nothing. All right. Okay, very cool. All right, gang. And just like that, I am flat out of time. I saw a question about McDonald's stream buy, and yeah, I still have some of my conservative entry in McDonald's. That was a setup that we talked about in the options room. I still have a little bit of that, the conservative level. So let's see. Gang, take the paper cuts, take the small hits now, free up the capital, free up your mind, fresh eyes, and then we can look to rebuild our book when all the dust settles post CPI. And I do believe there are going to be a lot of opportunities once that dust settles. So don't be impatient. Don't hang on to your losers longer than you have to. Free up the capital. We can always redeploy that later. Be good to each other. I'll see you tomorrow.